Before we begin, please remember that I am not a licensed insurance or financial professional. This video is for informational and educational purposes only and should not be considered financial or legal advice. The world of insurance is complex and state-specific. You should always consult with a qualified, licensed professional in your state to discuss your individual needs and circumstances before making any decisions. Two neighbors living side by side on a quiet suburban street. Let's call them Sarah and Mike. Both drive a Honda CR-V, both have clean driving records, and both need to renew their auto insurance. Sarah, being tech-savvy, decides to handle it herself. She spends a Saturday afternoon hopping between websites with talking animals and catchy jingles, meticulously entering her information over and over again. After 3 hours, she finds a policy from a big-name direct insurer that's $50 cheaper per month than her renewal. She's thrilled. She clicks buy, prints her ID cards, and feels like she's won the game. Mike takes a different approach. He makes one 10-minute phone call to a local independent insurance agent he found through a friend. He tells the agent what he needs, emails over his old policy, and goes about his weekend. On Monday, the agent calls back with 3 different quotes. One is a bit more expensive, one is about the same as his old policy, but one from a company he's barely heard of is actually $60 cheaper than his old plan and has higher liability limits and lower deductibles. Mike says, "Let's do it." The whole process took him less than 20 minutes of active time. Now, for 6 months, Sarah feels like the genius. She's saving $50 a month, and she loves telling people how she cut out the middleman. But then the unexpected happens. A freak hailstorm rolls through their town, turning their quiet street into a war zone of pockmarked metal. Both Sarah's and Mike's CR-Vs look like they've been beaten with 1,000 tiny hammers. This is it. The moment of truth. This is why you pay for insurance. Sarah goes online and files her claim. She gets an automated email. The next day, she's on the phone for 2 hours, navigating an endless phone tree, only to be told an adjuster will call her back in 48 to 72 hours. 3 days later, a guy from a national adjusting firm, a third-party contractor who doesn't even work for her insurance company, finally shows up. He spends 7 minutes looking at her car, and a week later, she gets an estimate that's $2,000 less than what her local body shop quoted. When she calls to dispute it, she's back in the call center maze, talking to a different person every single time, a person who has no idea who she is and is just reading from a script. She's stressed, she's angry, and she's losing this fight. Mike, on the other hand, made one phone call to his agent. The agent said, "Don't worry, Mike, I'm on it. Take it to Dave's Body Shop on Main Street, they do great work. I'll handle the rest." The agent files the claim for him, deals directly with the insurance company's adjuster, an adjuster he has a professional relationship with, and advocates on Mike's behalf. He makes sure the estimate from the insurance company matches the body shop's quote. He even calls Mike to remind him about the rental car coverage on his policy and helps him get it set up. Mike's car is in the shop the next day, and the check is in the mail. He didn't have to fight. He didn't have to wait on hold. He had a professional ally in his corner. This story isn't an exaggeration. It happens every single day all across America, and it exposes the massive critical question that the billion-dollar advertising budgets of the big direct insurance companies are designed to make you ignore. Is saving a few bucks a month worth the risk of being completely on your own when disaster strikes? That is exactly what this video is about. We are going to pull back the curtain on the entire auto insurance industry. We're going to dissect the 2 ways you buy insurance, going direct to a company like Geico or Progressive versus using a professional agent, and give you the unfiltered truth about both. This isn't just about finding the cheapest price. This is about understanding value. It's about protecting your car, your finances, and your family. By the end of this video, you will have a crystal clear framework to decide once and for all which path is right for you. You'll know the hidden traps to avoid, the right questions to ask, and you'll be armed with the knowledge to make a decision that could save you not just hundreds, but potentially tens of thousands of dollars and an ocean of stress down the road. So let's start by dismantling the single biggest myth in the insurance world, the core of every direct-to-consumer ad you've ever seen. The idea of cutting out the middleman. Sounds so simple, so logical. Why pay an agent a commission when you can go straight to the source and keep that money in your pocket? It's the same reason you buy from Amazon instead of a department store, right? Cheaper, faster, more efficient. But here's the problem. Insurance isn't a toaster. It's a promise. And an insurance agent isn't just a salesperson. A good agent is a risk advisor. And that commission you think you're saving? You're still paying it. You're just paying it to a different place. Think about it. Those direct insurance companies spend billions, that's billions with a B, on advertising every single year. The Gecko Flow, the Emu Peyton Manning. Where do you think that money comes from? Comes from you. It's baked right into your premium. Instead of paying an agent in your town to provide you with personal advice and service, you are paying for Super Bowl commercials and celebrity endorsements. You are funding a colossal marketing machine designed to get millions of people to click a button. You haven't cut out a cost. You've just reallocated it from personal service to mass advertising. The direct model is built on one thing: scale. They want to process you, the customer, as quickly and as cheaply as possible. They've perfected the art of making the buying process incredibly simple and frictionless. A few clicks, a few questions, and boom, you're insured. Feels great. Feels easy. But what they've commoditized is the advice, the human element, the expertise. When you buy direct, you are the agent. You are responsible for deciding if you need $25,000 or $250,000 in liability coverage. You are responsible for understanding what uninsured motorist stacking means and whether you need it in your state. You are responsible for knowing if you need an endorsement for your custom rims or your rideshare gig. The website will give you the state minimums and some common options, but it has no idea about your life. It doesn't know you just had a teenage son start driving, or that you have $1 million retirement account that's exposed in a major lawsuit. The website's job is to sell you a policy quickly. It is not designed to protect you properly. This is the fundamental trade-off. The direct model offers perceived savings and upfront convenience in exchange for you taking on all the risk of being your own expert. You're the pilot, the navigator, and the mechanic all at once. And for some people, maybe someone with very few assets, a simple life situation, and a deep understanding of insurance contracts, that might be an acceptable trade-off. But for most people, it's a gamble they don't even know they're taking. They see that cheaper monthly premium and think they've found a loophole. But that loophole might be a policy with dangerously low liability limits that could leave them bankrupt after one serious accident. That deal might disappear the second they have to file a claim and find themselves battling a faceless call center on their own. Just like Sarah. The convenience of clicking buy at midnight is quickly forgotten when you're spending 40 hours on the phone trying to get your car fixed correctly. And that's the fundamental trade-off. You trade personalized service for perceived speed and a slightly lower price tag. But what happens when that trade-off blows up in your face? What's the alternative? Let's flip the script. Instead of Sarah, let's talk about Mark. Mark is a project manager, married with 2 kids, and he values his time more than just about anything. A few years ago, he was in the same boat as Sarah, shopping for insurance online. He got a dozen quotes, all within a few dollars of each other. But then he remembered a piece of advice his father gave him. Your biggest assets aren't your car or your house. It's your ability to earn an income and your peace of mind. Find someone who helps you protect those. So Mark decided to call an insurance agent. Not just any agent, but an independent agent his colleague recommended. We'll call her Emily. Mark spent 30 minutes on the phone with Emily. She didn't just ask for his VIN and driver's license number. She asked about his commute. She asked if his teenage son would be driving soon. She asked about his assets, his job, and what he was trying to protect. At the end of the call, Emily came back with 3 quotes from 3 different, highly rated companies. One was actually $5 a month cheaper than the best quote Mark found online. The other 2 were slightly more, but included crucial coverages Mark hadn't even considered, like higher uninsured motorist protection and rental car reimbursement that would actually cover a vehicle similar to his. He chose the middle option. He paid about $10 more per month than the cheapest online quote. And for 2 years that $10 felt like a waste. Until it wasn't. One rainy Tuesday morning, Mark was on his way to a critical client meeting. A driver in a commercial van ran a red light and T-boned his SUV. The airbags deployed, the car was a wreck, but thankfully Mark was okay, just shaken up. After the police and ambulance left, he stood on the side of the road, his heart pounding. His first instinct wasn't to Google an 800 number. It was to call Emily. She picked up on the second ring. "Mark, are you okay?" That was the first thing she asked. Not "what's your policy number?" but "are you okay?" He explained what happened, his voice trembling. And Emily took over. She said, "Okay, Mark. I'm starting the claim for you right now. A tow truck is on its way. I've already arranged for a rental car, an SUV just like we discussed, to be ready for you at the Enterprise down the street. Just focus on getting home safely. I'll handle the rest and call you with an update in 2 hours. That is the agent difference. It's the difference between a transaction and a relationship. It's having a professional advocate, a financial first responder, in your corner when things go sideways. But not all agents are the same. This is probably the most important thing you'll learn in this entire series. There are 2 primary types of insurance agents, and understanding the difference is critical. First, you have the captive agent. A captive agent works for one single insurance company. Think of your local State Farm, Allstate, or Farmers agent. They are experts on their company's products. They know the ins and outs, the discounts, the specific policy language better than anyone. They have a direct line to the underwriters and claims adjusters within that one company. The benefit is deep specialized knowledge. The downside? They can only sell you products from that one company. It's like going to a Nike store. The salesperson knows everything there is to know about Nike shoes. They can find you the perfect Air Max for your foot, but they are never ever going to tell you that the new Adidas Boost might be a better fit for you. Their loyalty is, by definition, captive to their brand. Then you have the independent agent. An independent agent is like an insurance broker. They don't work for any single insurance company. Instead, they represent multiple companies, dozens, sometimes even hundreds. Their job is to be your personal shopper. You tell them what you need, and they go out into the marketplace and find the best company, policy, and price to fit your specific situation. Their loyalty isn't to a brand. It's to you, the client. They can compare quotes from a national giant like Travelers, a regional specialist like Erie Insurance, and a smaller mutual company you've never even heard of, all in one sitting. This is the model Mark used with his agent, Emily. When the van company's insurance started dragging their feet, claiming Mark was somehow partially at fault to reduce their payout, Mark didn't have to argue with them. Emily did. She spent hours on the phone, sending police reports, citing state traffic laws, and escalating the issue to a supervisor. She was the buffer. She absorbed all the stress and frustration of the claims process so Mark could focus on his work and his family. The other insurance company eventually accepted 100% of the liability. Mark's car was declared a total loss, and because Emily had advised him to get new car replacement coverage, something the online quote generators never even offered, the insurance company cut him a check for a brand new, current model year version of his SUV, not just its depreciated value. That $10 extra a month he'd been paying? It saved him over $12,000 on that one claim. Now the big objection I hear all the time is, but aren't agents more expensive? Don't I have to pay their commission? Yes and no. It's a common misconception. Agents are typically paid a commission by the insurance company they place your policy with. That cost is built into the premium you pay, whether you buy direct or through an agent. When you buy direct from Geico or Progressive, they're not eliminating that cost. They're just reallocating it from agent commissions to massive advertising budgets. You're still paying for it. You're just paying for Flo and the gecko instead of a person like Emily. And here's the kicker. An independent agent can often save you money, because they can shop so many different carriers, including ones that don't spend billions on advertising. They can often find a better rate than you can find on your own. They have access to markets you don't. More importantly, they save you from making catastrophic mistakes. Buying the absolute cheapest policy online might save you $15 a month, but if it has state minimum liability limits of just $25,000, and you cause a multi-car accident, that savings could lead to you being sued personally for hundreds of thousands of dollars and losing your home. An agent's primary job is to prevent that from happening. They are your risk manager. The value isn't just in the price they find you. It's in the disasters they help you avoid. So the agent model provides a personal relationship, expert advice tailored to your life, and an advocate who fights for you when you need it most. They can simplify your life by bundling your home, auto, and other policies, often with significant discounts. They conduct annual reviews to make sure your coverage keeps up with your life changes. A new car, a new home, a new driver in the family. It is a proactive, high-touch approach, the polar opposite of the reactive, do-it-yourself direct model. The agent model sounds pretty good, right? A personal advisor, a claims concierge, a market shopper all rolled into one. Seems like the obvious choice. But there's a catch. Huge one. Not all agents are created equal. In fact, choosing the wrong agent, someone who is lazy, uninformed, or just trying to make a quick buck, can be even more damaging than going it alone with a direct carrier. You get all the costs without any of the benefits. So how do you tell the difference? How do you separate the expert advisors like Emily from the policy pushers who will disappear the second you have a problem? How do you find a true partner to protect your family's future? It starts with a simple shift in mindset. You are not shopping for an agent. You are interviewing candidates for one of the most important positions in your financial life. The person who will stand between you and financial ruin. And just like any critical job interview, you need to ask the right questions. You need a framework to separate the pretenders from the professionals. I call it the 3 pillars of a great agent. If an agent you're considering doesn't stand firmly on all 3 of these pillars, you walk away. It's that simple. The first pillar is the educator. A great agent's primary job is not to sell you a policy. It's to make you smart enough to choose the right one. A policy pusher, the kind you want to avoid, will start the conversation with, "So what are your current liability limits?" They want to plug your old numbers into their system, beat the price by $10 and get you to sign. They use jargon like comprehensive, collision, uninsured motorist, and PIP, as if you should already know what they mean. The entire process feels rushed, transactional, and confusing, which is exactly how they want it. Confusion leads to you just trusting them and signing on the dotted line. A true educator does the complete opposite. They start with questions about you. Tell me about your commute. Do you have kids who will be driving soon? What's the biggest asset you're trying to protect? Is it your home, your savings, your future income? They don't assume you know anything. They'll say something like, "Okay, let's talk about liability. I want you to imagine the worst-case scenario." You glance at your phone for a split second, and you cause a multi-car pileup on the freeway. Several people are seriously injured. Your policy has a limit of $100,000 per person, but one of the victims is a surgeon, and their injuries mean they can never operate again. Their lost lifetime income is valued at $5 million. What happens then? Suddenly, insurance isn't just a piece of paper. It's real. They're not selling you a product. They are giving you a personalized education on risk. They draw diagrams. They use analogies. They make the complex simple. They want you to understand the why behind every single number on that policy declaration page. A great agent believes that an educated client is their best client, because that client will understand the value they provide and will stay with them for years. Here's your first test. When you're talking to a potential agent, ask them this exact question. Can you walk me through a hypothetical worst-case claim scenario for the policy you're recommending, and tell me honestly where I might still be exposed? A policy pusher will stumble. They'll give you a vague, canned answer. But an educator? Their eyes will light up. They live for that question. That's your first green light. The second pillar, and this is arguably the most important, is the advocate. This is what separates an agent from a 1 to 800 number. An order taker, the bad version of an agent, sees their job as done the moment your payment clears. You get into a fender bender. You call them in a panic, and their response is, "Oh, that's terrible. The number for our claims department is on your ID card. You'll need to call them to get it started. Let me know if you need anything else." They've just passed the buck. They've transferred you to a giant, faceless call center, and you are now on your own, a tiny fish in a massive, indifferent ocean. A true advocate becomes your champion the second disaster strikes. You call them heart-pounding, standing on the side of the road, and their first words are, "Are you okay? Is everyone safe? Don't worry about the insurance part yet, we will handle that. Just focus on you." They become your quarterback for the entire claims process. They don't just give you the number. They initiate the claim for you. They know the adjusters. They know how to phrase the incident to ensure it's processed correctly. They follow up relentlessly. Let me give you a real-world example. A client of a great agent gets their car stolen. They file the claim. The insurance company's first offer for the car's value is insultingly low, thousands below what it would cost to replace. The client, stressed and frustrated, is ready to just accept it, but they call their agent first. The agent says, "Absolutely not. Do not accept that offer." The agent then spends the next 3 days compiling a report. They find listings for comparable vehicles in a 100-mile radius. They pull up the client's service records to prove the car was in pristine condition. They find a clause in the policy the adjuster conveniently overlooked. They get on the phone with the claims supervisor and present their case, not as an angry customer, but as a professional peer. The result? The insurance company's offer magically increases by $4,000. That agent didn't just save the client $4,000. They saved them weeks of stress, fighting, and feeling helpless. They were an advocate, So here's your second test question. Ask a potential agent. Tell me about the most difficult claim you ever helped a client navigate. What was your specific role in it, beyond just filing the initial report? Listen to their story. Do they talk about how they fought for the client? How they solved a problem? Or do they just talk about how great the claims department was? Their answer will tell you everything you need to know about whether they will be in the trenches with you when it matters most. The third and final pillar is the community pillar. This is the difference between a local professional and a ghost in a machine. The policy pusher or the call center agent might be in another state, or even another country. They don't know that the intersection of Main and Fifth is a nightmare for accidents. They don't know which body shops in your town do shoddy work, and which ones are master craftsmen. They have no local reputation to uphold. If they give you bad advice, you can't run into them at the grocery store or the local high school football game. They are anonymous. A true community pillar agent is woven into the fabric of your town. Their name is on the back of a little league jersey. They have a physical office you can walk into. Their kids go to the same schools as your kids. Their entire business, their entire livelihood, is built on their local reputation. One angry post in a community Facebook group from a client they treated poorly can be devastating for their business. This gives them an incredible incentive to do the right thing every single time. But it goes deeper than that. Because they are a community pillar, they become a hub of local knowledge. When your car is damaged in a hailstorm, they won't just help with the claim. They'll tell you, don't take it to that big chain shop on the highway. Take it to Dave's Auto Body on the south side of town. I've sent 20 clients to him, he does phenomenal work, and he'll treat you right. They have a network. They know the best tow truck companies, the most honest mechanics, even a good local attorney if a claim gets really complicated. They become a trusted resource for more than just insurance. They are a partner in your community life. So your final test is to look for evidence of this. Check their Google reviews. Are they from people in your town? Do the reviews talk about long-term relationships and personal service? Do they have a professional established office? Are they involved in local charities or events? You're not just looking for an insurance license. You're looking for someone who is invested in the same community you are. The educator, the advocate, and the community pillar. These three things are what you are paying for with an agent. It's not just a policy. It's expertise, it's protection, and it's partnership. So we've painted a pretty compelling picture for having a great agent. It sounds like the obvious choice, right? But hold on. This is where the direct-to-consumer companies, the Geicos and Progressives of the world, step into the ring. And they have a knockout punch they've been perfecting for decades: price. They claim that by cutting out the middleman, the agent, they can pass those savings directly to you. But is that true? And what are you really giving up for that potentially lower price? We're about to dissect the direct model, and the truth is far more complicated, and frankly more dangerous than their quirky commercials would have you believe. Let's start with the fundamental promise of the direct insurance model. It's a promise you've heard 1,000 times, sung by cartoon generals and acted out by quirky characters in pristine white aprons. The promise is simple. We cut out the middleman so you save money. It's brilliant marketing because it taps into a core American belief that middlemen are just unnecessary leeches, adding costs without adding value. And in some industries, that's absolutely true. But when it comes to protecting every single thing you own and everything you will ever earn, that middleman isn't just a salesperson. That middleman is your advisor, your advocate, and your translator in a world of legal jargon designed to be confusing. When you cut out the middleman, you're not just firing a salesperson. You are, in that very moment, hiring yourself for the job. You become your own insurance agent. Think about it this way. Buying insurance direct is like being handed a flat pack box from IKEA. Inside are all the pieces to build a complex piece of furniture, your financial security. The direct insurance company's website is the instruction manual. It's slick, it has nice graphics, and it seems really simple. Just a few steps. But here's the catch. The instruction manual is written in a language you don't fully understand. It's filled with terms like bodily injury liability, uninsured motorist stacking, tort options, and personal injury protection. And if you put tab A into slot C instead of slot B, the entire structure might look fine from a distance, but the moment any real pressure is applied, the moment you have an accident, the whole thing collapses, and you're left sitting in a pile of splintered wood, financially ruined. The direct model bets on the idea that you'll be so thrilled with the easy assembly and the low price, you won't realize you've built a dangerously unstable product until it's far too late. The speed they advertise, Get a quote in 7 minutes. That speed is not a feature. It's a bug. It's a warning sign. How can anyone possibly assess your entire financial risk profile in the time it takes to microwave a frozen dinner? They can't. The system isn't designed to assess your risk. It's designed to minimize friction. It's a user experience masterpiece built to guide you down the path of least resistance, which almost always leads to the cheapest possible option. State minimum liability coverage. Every state has a minimum amount of insurance you're legally required to carry to drive. And to an algorithm designed to give you the lowest number, that's the finish line. The website might show you other options, but the anchor price is almost always pathetically low. Let's make this real. Imagine you live in a state where the minimum property damage liability is $25,000. That sounds like a lot of money, right? So you click the box, you pay your premium, and you feel great because you're saving $40 a month compared to that other quote. Then one rainy Tuesday, you're looking down to change the podcast, and you don't see the traffic stopped ahead. You slam into the back of a brand new Audi Q8. The driver is okay, thankfully, but their car is not. The airbag's deployed, there's frame damage, and the advanced electronics are fried. The car is a total loss. The bill to replace that Audi isn't $25,000. It's $85,000. Your insurance company writes a check for $25,000. The maximum they are legally obligated to pay under the policy you chose. And the other $60,000? That's your bill. The other driver's insurance company will come after you for it. And they will get it. They will garnish your wages. They will put a lien on your house. They will seize your assets. Your life is now permanently altered. That $40 a month you save just cost you $60,000, your financial stability, and your peace of mind for the next decade. And the slick, easy-to-use website that sold you the policy? It bears zero responsibility. Because you were your own agent. You chose the coverage. This is the dangerous illusion of the direct model. Presents insurance as a simple commodity like buying a blender on Amazon. You just compare prices and features and click buy. But it's not a blender. It's a complex legal contract. A shield meant to protect you from financial catastrophe. The algorithm that gives you a quote isn't your friend. It's a conversion tool. It doesn't know you just got a promotion and your net worth increased. It doesn't know your daughter is about to start driving. It doesn't know you have a long commute through a high accident area. It only knows what you punch into the boxes. And its sole purpose is to serve you a number so attractive that you will enter your credit card information before you have a chance to second guess it. But wait, you might say, I can just call them. They have a customer service line. And you're right, they do. But let's be crystal clear about who you're talking to. You are talking to a call center employee. That person works for the insurance company. Their primary job is to handle a high volume of calls efficiently. They are measured on metrics like average handle time. Their goal is to answer your question and get to the next call in the queue. They are not paid to be your personal risk manager. They are not incentivized to spend an hour on the phone with you, asking probing questions about your life, your assets, and your family to uncover potential gaps in your coverage. They follow a script. Can they add a car to your policy? Yes. Can they take a payment? Absolutely. Can they provide a comprehensive, holistic review of your financial exposure and recommend specific endorsements to protect you? That is not their job. An independent agent's job, by contrast, is precisely that. Their success is tied directly to your long-term well-being and satisfaction, not to how quickly they can get you off the phone. The real danger lies in the unknown. It's the coverage gaps you don't even know exist. For example, did you decide to start driving for a food delivery service to make some extra cash? The moment you turn that app on and are waiting for a delivery, most standard personal auto policies provide zero coverage. It's called a livery exclusion. If you get into an accident, your claim will be denied. You are completely on your own. Did the 7-minute online quote process ask you about your side hustle? Of course not. Do you have expensive custom wheels on your truck? Did you install a new sound system? That's called custom parts and equipment. And it's almost never covered unless you specifically add an endorsement for it. The website's algorithm didn't ask you about your rims, did it? Do you own your home? If you cause a serious accident and your liability limits are too low, they can come after your house. An agent would see you have a homeowner's policy and immediately recommend an umbrella policy for an extra $1 million of liability protection, which costs pennies on the dollar. The direct-to-consumer website doesn't connect those dots. It sees your auto policy as one transaction and your home policy as another. It's not looking at the big picture of your life. This is the trade-off. The direct model offers the sleek, frictionless experience our modern digital lives have conditioned us to expect. It offers speed, convenience, and the feeling of being in control. But what you're trading for that convenience is expertise. You are trading a human advocate for a cold, impersonal algorithm. You are saving a few dollars a month in exchange for taking on 100% of the risk that you've chosen the right coverages, the right limits, and the right endorsements. And for millions of people, that trade feels fine, feels smart, feels like they've beaten the system, until the day the system fights back. Until the day that rainy Tuesday arrives, and they have to make the call. They have to file a claim. And that is when the true cost, the devastating, hidden cost of cutting out the middleman, is finally revealed. Because navigating the claims process with a direct carrier, without an agent in your corner, is a completely different world. It's a world where you are no longer a customer to be won over, but a liability to be managed. When you call a direct carrier's 800 number after an accident, the first thing you'll notice is the shift in tone. The warm, fuzzy, "we're your buddy" marketing voice is gone. You're now in a system, a flowchart. An automated voice will ask you for your policy number, your date of birth, the last four of your social. You're being authenticated, categorized, and routed. You're not a person, you're a data point. When you finally get a human, they're not a problem solver. They're an information gatherer. They have a script on their screen, and their job is to get you through it as quickly as possible. Date of accident, time, location. Were there any injuries? Was a police report filed? What's the report number? It's a cold, sterile process designed for one thing: efficiency for the company. You hang up the phone feeling less reassured and more processed. You're told a claims adjuster will be assigned to your case and will contact you within 24 to 48 hours. And so you wait. In that waiting period, anxiety builds. Your car is wrecked, your life is disrupted, and the company you pay every single month for peace of mind has just put you in a queue. When the adjuster finally calls, you have to understand who this person is and what their job entails. They are a direct employee of the insurance company. Their loyalty, their training, their performance reviews, and their bonuses are all tied to how well they serve the company's interests. And the company's primary interest in a claim is to close it as quickly and for as little money as possible, while operating within the confines of the law and the policy contract. The adjuster is not your friend. They are not your advocate. They are a professional negotiator for the other side. You just happen to be paying their salary. Let's imagine a scenario. You get into an accident that is clearly not your fault. Someone blows through a stop sign and T-bones you. You call your direct carrier, go through the prompts, and wait. The adjuster, let's call him Tom, calls you back. His first questions might sound helpful, but listen closely. So you were proceeding through the intersection. How fast were you traveling? Were you listening to music? Were you on the phone, even hands-free? Did you see the other vehicle approaching the stop sign? Did you have an opportunity to take evasive action? Do you see what's happening? These aren't "how can I help you" questions. These are "how can I find a percentage of fault to assign to you" questions. In many states, if they can prove you were even 1% at fault, it can affect the settlement. So, from the very first conversation, you are on the defensive whether you realize it or not. You are being cross-examined by a trained professional whose goal is to minimize his company's payout. Next comes the vehicle inspection. The direct carrier will heavily pressure you to use one of their preferred or direct repair program body shops. They'll sell it to you as a convenience. It's faster. We guarantee the work. You don't have to handle any of the payments. The reality is these shops have contracts with the insurer. They agree to give the insurance company discounted labor rates and use specific types of parts, often aftermarket or salvaged parts instead of original manufacturer parts, in exchange for a high volume of referral business. If you want to use your own trusted mechanic, the one who has worked on your family's cars for a decade, you'll suddenly face friction. The adjuster might say, "Well, we can't guarantee their work," or "It will take much longer for us to send an appraiser out there," or "We'll only pay what our preferred shop would have charged, so you might be on the hook for the difference." It's a subtle but powerful form of intimidation designed to steer you toward the cheapest option for them. And what if your car is a total loss? The company will make you an offer based on its actual cash value, or ACV. This number is generated by a third-party software system, and it is almost always lower than what you expect. It's lower than Kelley Blue Book, lower than what you see similar cars selling for online. When you question it, the adjuster will send you a dense report full of incomprehensible adjustments and tell you, "This is what the system says it's worth." Now the burden of proof is on you. You, the grieving car owner, have to spend hours researching comparable vehicles for sale in your area, documenting every feature, every recent repair, to fight for a fair value. You are alone, arguing with a professional who does this all day, every day. It is an exhausting uphill battle. Now let's rewind. Let's place the exact same accident, the same wrecked car, the same you. But this time you have a policy through an independent agent. The accident happens. You're standing on the side of the road, shaken and confused. You don't call a 1-800 number. You pull out your phone and you call a name. You call Maria, your agent. The first words you hear aren't from a robot, they're from a person you know. Are you okay? Is everyone safe? That's the first question. Not your policy number. Your well-being. Maria immediately shifts from insurance agent to crisis manager. She calms you down. She walks you through the crucial first steps. Don't talk about fault. Just exchange information. Take pictures of everything, the cars, the intersection, the license plates. Get a police report if you can. When you're home safe, call me back, and we will handle everything else together. That one word, together, changes the entire dynamic. When you call Maria back, she doesn't just take the information. She helps you frame it. She knows what details are important and what's just noise. Then, she reports the claim to the carrier on your behalf. This is called a first notice of loss, and having an agent do it is a game changer. She's speaking the industry language, ensuring the claim is set up correctly from the very first minute, minimizing the chances for the carrier to twist your words later. The insurance company still assigns an adjuster, but now that adjuster isn't just dealing with you. They're dealing with Maria. Maria is a professional who brings that company hundreds of thousands, maybe millions of dollars in premium business every year. She has professional relationships with the claims managers. She has leverage. The adjuster knows they can't use the same pressure tactics on Maria that they might use on an individual. When the adjuster's questions start to veer into interrogation territory, Maria can step in. She's the buffer. She can tell the adjuster, "My client has already provided a clear and consistent statement. Let's focus on the undisputed facts and get this vehicle appraised. You want to use your trusted local mechanic?" Maria doesn't see that as a problem. She sees it as your right. She calls the adjuster and says, "My client will be taking their vehicle to Bob's Auto Body. Please assign a field appraiser to inspect it there." End of discussion. There's no friction for you. Maria absorbs it. She's the shield. Your car is a total loss and the company comes back with that same lowball offer. You don't have to fight it alone. You forward the report to Maria. She's seen hundreds of these. She knows exactly how to dissect them. She helps you gather the right evidence, not just comps, but receipts for the new tires you just bought, the upgraded sound system you installed. She packages it all and presents it to the adjuster, not as a desperate plea from a victim, but as a professional counteroffer from an industry peer. She negotiates for you. She fights for that extra $1,000, $2,000, $3,000 that is rightfully yours. In the direct model, you are the project manager of your own catastrophe. You have to become an expert in claims negotiation, auto body repair, and vehicle valuation, all while dealing with the emotional and logistical trauma of an accident. With an agent, you have a professional in your corner. You have an advocate whose success is directly tied to your satisfaction, not to the insurance company's profit margin on a single claim. They are your guide, your translator, and your champion through the single most important and stressful part of the insurance lifecycle. They turn a world where you are a liability to be managed into one where you are a client to be served. That difference in your moment of crisis is worth everything. And for millions of people, that statement is gospel. But for millions of others, a different question emerges. Is it worth the price? Because while the agent model offers a human shield in your darkest hour, another model was born from a very different promise. Not a promise of a person, but a promise of a process. A promise of speed, control, and above all, savings. This is the world of direct-to-consumer insurance. To understand the direct model, you have to understand the revolution that created it. It's the same revolution that replaced the travel agent with Expedia, the stockbroker with E-Trade, and the video store with Netflix. It's the digital revolution, and its core belief is that the middleman is an inefficiency, an expensive, time-consuming layer that technology can simply erase. The pitch is incredibly seductive. Why pay a commission to an agent in a brick-and-mortar office when a sophisticated algorithm and a well-designed app can do the job for a fraction of the cost, 24 hours a day, from the comfort of your couch? The number one, undeniable, headline-grabbing advantage of the direct model is cost. Let's be brutally honest about this. For many people, insurance is a grudge purchase. It's a mandatory expense you pay for, hoping you never have to use it. So, naturally, the lower the price, the better. Direct carriers built their entire empire on this principle. They don't have to pay for thousands of physical offices across the country, each with its own rent, electricity, and staffing costs. More importantly, they don't have to pay an agent's commission on every policy they sell and every renewal they process. That commission isn't a small number. It can be anywhere from 7 to 15% of your premium. So if you're paying $2,000 a year for car insurance, the agent could be making up to $300 of that every single year. The direct model takes that $300 and, in theory, hands a large chunk of it back to you in the form of a lower premium. They are betting that you would rather have the cash in your pocket than the phone number of a local agent. And for a massive segment of the population, that is an absolutely winning bet. But the appeal goes far beyond just the price tag. The second pillar of the direct model is control and convenience. The old way of doing things felt, well, old. You had to call an agent during business hours, maybe make an appointment, sit in an office, and have them type your information into their computer. The direct model flips that script entirely. It puts you in the driver's seat. It's 2 in the morning, you can't sleep, and you suddenly wonder if you're overpaying for car insurance. You can grab your phone, go to a direct carrier's website, enter your information, and have 3 different quote options in less than 10 minutes. You can bind the policy, print your insurance cards, and be legally insured before your coffee is even brewed. This sense of empowerment is profound. You're not waiting for someone to call you back. You're not operating on someone else's schedule. You have a dashboard, an app on your phone that gives you direct access to your policy documents. You can make changes yourself, add a new car, remove an old one, adjust your coverages with a few clicks. It's a system designed for the self-sufficient DIY generation, a generation that is comfortable doing its own research, comparing options online, and making its own decisions without needing to talk to a salesperson. It feels modern, efficient, and transparent. So what does this experience actually look like in practice, especially when things go wrong? Let's go back to that dreaded phone call after an accident. With a direct carrier, you won't be calling your local agent because you don't have one. Instead, you'll likely open up your app and use the File a Claim feature, or you'll call an 800 number. This will connect you to a claims service center, which could be located anywhere in the country. You'll speak to a first notice of loss representative, whose job is to take down the initial details of the accident with maximum efficiency. From there, your claim is assigned to a claims adjuster. This is a professional, licensed individual who works for the insurance company. You'll likely never meet them in person. All your communication will be over the phone or through the app's messaging portal. This person is part of a massive data-driven machine. Their performance is measured by metrics: how quickly they close claims, how accurately they assess damages, and how closely they adhere to the company's protocols. It's not a system built on relationships. It's a system built on workflow optimization. And for many claims, this system works beautifully. If you have a simple fender bender, you upload photos of the damage from your phone, the adjuster reviews them using AI-assisted software, an estimate is generated, and the money is direct deposited into your bank account, sometimes in a matter of hours. It can be a shockingly fast, frictionless, and impressive process. It's the Amazon Prime of insurance claims. This model is practically perfect for a specific type of person. Let's call them the optimizer. The optimizer has a straightforward life insurance-wise. They have 1 or 2 cars, a clean driving record, and they don't own a business or have complex assets to protect. They are digitally savvy, they read the fine print, and they understand the basics of liability, comprehensive, and collision coverage. They enjoy the process of comparing quotes and finding the best deal. For the optimizer, an agent isn't a trusted advisor. They're an unnecessary and expensive intermediary. The direct model gives them exactly what they want: a low price, a slick user interface, and total control. But here is the critical multi-million-dollar question that hangs over the entire direct-to-consumer model. What happens when you don't know what you don't know? The direct system is a powerful tool, but it's a passive one. It will give you exactly what you ask for. It will not ask you the questions you don't know you should be asking. It will not tell you that the state minimum liability coverage of $25,000 is catastrophically inadequate if you cause an accident that seriously injures a surgeon or a software engineer. It will not advise you that because you started a small side business from home, you might have a new uninsured liability exposure. It won't notice that you have a teenage driver in the house and suggest adding a personal umbrella policy to protect your family's assets from a devastating lawsuit. With a direct carrier, you effectively become your own insurance agent. You are the one responsible for assessing your own risk. You are the one who has to decide between a $500 deductible and a $1,000 deductible. You are the one who has to read the policy exclusions and understand what's covered and what isn't. The website will present you with options, sliders, and drop-down menus. It will make it easy to choose. But it won't provide wisdom. It provides choice but not necessarily guidance. This is the hidden trade-off. You trade the cost of an agent's commission for the responsibility of their expertise. For the optimizer with a simple profile, this is a fantastic deal. They don't need the expertise, so they're happy to pocket the savings. But for someone whose life is more complex, someone with significant savings, a home, a business, or young drivers, navigating this alone can be like walking through a minefield blindfolded. The money you save on the premium could be a rounding error compared to the hundreds of thousands of dollars you could lose from having the wrong coverage when a real disaster strikes. And that efficient, well-oiled claims machine? It's phenomenal when your claim is simple and straightforward. But when it's not, when there's a dispute over who was at fault, when the other driver's injuries are complex and long-term, when your claim gets denied for a reason you don't understand, that's when the faceless, process-driven system can feel cold and adversarial. You're no longer dealing with a local advocate who knows your name. You are a policy number in a queue, speaking to a different person every time you call, trying to navigate a complex bureaucracy on your own, right in the middle of one of the most stressful events of your life. The efficiency you loved when you bought the policy can suddenly feel like a brutal, unfeeling assembly line when you actually need the help you paid for. So we have two fundamentally different philosophies. One offers a human guide, a personal advocate whose expertise you pay for through a commission. The other offers a powerful, efficient digital tool that puts the savings and the responsibility squarely in your hands. One is built on relationships, the other on algorithms. Choosing between them isn't just about finding the cheapest price. It's about deciding what kind of support system you want to have on the worst day of your driving life. But the plot thickens because even within the world of agents, there's a massive divide. A divide between agents who work for one single company and agents who work for you. This is the battle between captive and independent agents, and understanding that difference is the key to unlocking the entire insurance puzzle. So let's crack it open. On one side of the ring you have the heavyweight champions, the household names. Think of the agent with the big, familiar logo on their door, your State Farm, your Allstate, your Farmer's agent. These are captive agents. And the word captive is incredibly important. It doesn't mean they're trapped in a basement somewhere. It means they are captive to one single company. They are a dedicated specialist, a brand ambassador, an expert in one specific universe of products. When you walk into their office, you are walking into a world curated entirely by that one carrier. They eat, sleep, and breathe that company's policies, guidelines, and discount structures. Their entire professional life is built around knowing every nook and cranny of one playbook. On the other side of the ring you have the challenger, the strategist, the free mover. This is the independent agent. This person doesn't have a big single insurance brand over their door. Instead, their name is on the door. They don't work for an insurance company. They work with a whole portfolio of them. Dozens, sometimes over 100. They are the sworn enemy of brand loyalty. They're more like an insurance matchmaker or a personal shopper. Their job isn't to sell you a product from a specific shelf. Their job is to listen to your story, analyze your needs, and then go out into the vast, competitive marketplace to find the company that is the best fit for you. Their loyalty isn't to a single carrier. It's supposed to be to their client, to you. Now, on the surface, the independent agent sounds like the obvious choice, right? Why would you ever go to a restaurant that only serves chicken when you could go to a food court with 30 different options? Seems like a no-brainer. But this is where the details, the nuance, can make all the difference. This isn't a simple case of good versus evil, or more choice versus less choice. It's a fundamental difference in philosophy, and each one has powerful advantages and hidden pitfalls. Let's start with the captive agent. Imagine you're a person who values simplicity and brand recognition. You've seen the commercials your whole life. You trust the name. You walk into a captive agent's office, and the experience is often seamless. They are masters of their domain. They can tell you with absolute certainty, yes, if you bundle your home, auto, and life insurance, you will unlock our Platinum tier discount of 22.5%, plus you'll get our accident forgiveness endorsement, which works exactly like this. They have a deep, almost encyclopedic knowledge of their company's offerings. The process is streamlined. The technology is integrated. The left hand always knows what the right hand is doing because both hands belong to the same body. For someone with a relatively clean driving record, a standard car, and a home to bundle, this can be an incredibly efficient and effective path. The captive agent can build you a fortress of protection, all under one familiar banner, often at a very competitive price because of those deep, proprietary bundling discounts. But here's the catch, and it's a big one. What happens when you don't fit perfectly into their pre-designed box? Let's say you get a speeding ticket. Your previously perfect record is now blemished. And it just so happens that this particular company is extremely punitive when it comes to speeding tickets. Your rate at renewal skyrockets by 40%. You go back to your captive agent, the person you trust, and you ask them what you can do. And their hands are tied. They can look for other discounts within their system, maybe suggest a defensive driving course, but at the end of the day, they cannot offer you a policy from another company. They can't say, you know what, my company is really hitting you hard for this, but I know another carrier down the street that is far more forgiving for this exact situation. Let's move your policy over there. Saying that would be professional suicide. Their contract, their entire business model forbids it. They are captive. Their only solution to your problem has to come from their company's toolbox. And if the right tool isn't in there, you're out of luck. You're left with a choice. Accept the massive rate hike or start the entire shopping process over from scratch, all by yourself. Now let's flip the coin and walk into the office of an independent agent. You walk in with that same speeding ticket. You tell them your story. The independent agent doesn't see a problem. They see a puzzle. They listen intently. Plug your information into their comparative rater, a powerful piece of software that's like a search engine for insurance. And in minutes, they have quotes from 10, 15, maybe 20 different carriers. They can immediately see the entire landscape. They can say, okay, carrier A, your old company is quoting you at $3,000 a year. They hate that ticket. But look here. Carrier B barely cares about it, and they're at $1,900. And carrier C, a smaller company you've probably never heard of, is even better at $1,750, and they have slightly higher customer service ratings. This is the superpower of the independent agent choice. They are beholden to no single master. If your rates go up at one company, they can proactively reshop your policy next year to keep you competitive. If you buy a new car that your old company charges a fortune to insure, they can find one that doesn't. They are your long-term risk manager. Their value isn't just in finding you the best price today. It's in their ability to keep finding you the best value as your life changes over the years. This is especially critical for people with complex needs. A less-than-perfect driving record, a classic car, a home-based business, a young driver in the house. These are all situations where one company might see a massive risk, while another sees a standard, everyday client. The independent agent is the navigator who can steer you to the right port. So what's the downside? Why isn't everyone with an independent agent? Well, for one, the experience can be less polished. An independent agent is a small business owner, not an extension of a multi-billion-dollar corporation. Their office might not be as slick, their website not as fancy. More importantly, while they have breadth of knowledge across many companies, they may not have the same microscopic depth of knowledge of any single one as a captive agent does. A captive agent has spent 10,000 hours mastering one policy. An independent agent has spent that same 10,000 hours learning the highlights and quirks of 50 different policies. There can also be a paradox of choice. An agent offering you 2 or 3 well-explained options might feel more manageable than one offering you a spreadsheet with 25. And it's crucial to remember that not all independent agents are created equal. A great one is a priceless asset. A lazy one might only show you quotes from the 3 companies that pay the highest commissions. So how do you choose? Comes down to asking yourself what you value most. If you are a person who deeply values brand consistency, a one-stop shop, and have a straightforward insurance profile, a captive agent from a top-tier company could be a fantastic and highly competitive option. You're essentially betting that this one massive stable company will be the right fit for you now and for the foreseeable future. But if you are someone whose life is a bit more complex, if you believe in the power of the free market, and if you want an advisor who can pivot with you as your needs change, then an independent agent is almost certainly the right call. You're not betting on a single company. You're betting on an expert who has access to the entire market. You're hiring a personal advocate whose primary job is to make insurance companies compete for the right to have your business. The agent world, therefore, isn't just one thing. It's a spectrum. It's a choice between a specialist who knows one brand inside and out, and a generalist who knows the entire marketplace. One offers the power of focus, the other offers the power of choice. But we've spent all this time talking about agents, these human advisors who guide you through the process. What happens when you remove the human element entirely? What happens when you decide to go it alone, armed with nothing but your laptop and a Wi-Fi connection? This is the world of direct insurance, the Geicos, the Progressives, the Esurances of the world. And stepping into that world without a guide can be incredibly empowering. But it's also filled with hidden traps and costly misunderstandings that can turn your quest for savings into a financial nightmare. What are those traps? And how can you spot them before it's too late? That's exactly where we're going next. The first and most seductive trap is the state minimum myth. Every state has a legal minimum amount of liability insurance you must carry to drive a car. When you go online to a direct insurer's website, that state minimum option is always there. And guess what? It's always the cheapest. The price is so low it feels like a steal. You click it, you pay, you get your insurance card, and you feel like you just outsmarted the system. But what you've actually done is walk into a financial bear trap with a smile on your face. Let's make this real. Imagine you're driving home on the freeway. You're careful, but the car in front of you slams on its brakes. You swerve, you clip another car, and suddenly you're the cause of a 3-car pileup. Everyone is okay, thankfully, but the damage is extensive. The brand new SUV you hit needs $50,000 in repairs. The luxury sedan behind it needs another $30,000. That's $80,000 in property damage. Plus, one of the drivers has a back injury. Their initial medical bills are $40,000, and they're going to need physical therapy for a year. We're now well over $100,000 in damages that you are legally responsible for. But you have insurance, right? You pull out your policy, the one you got for that super low price. You see your liability limits are 25/50/25. That means your insurance will pay a maximum of $25,000 for any one person's injuries, a total of $50,000 for all injuries in the accident, and $25,000 for property damage. Your insurance company writes a check for $25,000 to the body shop. That's it. They've met their legal obligation. You are now personally on the hook for the remaining $55,000 in car repairs, plus all $40,000 in medical bills. You are facing a lawsuit for $95,000. That's a debt that can lead to garnished wages for decades, liens on your property, and potential bankruptcy. Your life is financially ruined. All to save what? $30, maybe $40 a month? A direct insurer's website won't tell you this story. It will present state minimum as a valid equal choice. An agent, on the other hand, a good agent, would likely refuse to sell you that policy. They would sit you down and explain this exact scenario because their job, their reputation depends on protecting you from that kind of catastrophe. The second trap is the deductible deception. This one is subtle. You're playing with the sliders on the quote website. You see that if you slide your collision deductible from $500 to $2,000, your monthly premium drops by a significant amount. Feels like free money. You think, I'm a safe driver, I probably won't get in an accident. I'll take the savings. But you're not just choosing a number. You're making a promise to your future self. You are contractually promising that if something happens, you can produce $2,000 in cash on the spot without hesitation. Can you? Right now, if your car was wrecked, do you have $2,000 you can hand to a body shop tomorrow morning without derailing your entire budget? For most people, the answer is no. So what happens? A hailstorm sweeps through town and your car looks like a golf ball. The repair estimate is $4,000. Your insurance is ready to pay, but they won't cut the check to the body shop until you pay your $2,000 deductible first. So your car sits, dented and damaged, for months while you try to scrape together the money you promised you had. The savings you enjoyed each month are instantly erased by the stress, the inconvenience, and the eventual massive payout. The website slider never asks, "Are you sure you can afford this?" Just shows you the cheaper price. An agent's first question would be, "What's a deductible amount you'd be comfortable paying tomorrow if the worst happens?" It's a fundamentally different conversation. This leads us to the third and perhaps most devastating trap, the coverage gap catastrophe. These are the coverages that people, in their quest for the lowest price online, uncheck without a second thought. Coverages like uninsured and underinsured motorist protection. Sounds complicated, so people skip it. But here's what it means. You're sitting at a red light and someone, texting and driving, smashes into your rear bumper at 40 miles per hour. The accident is 100% their fault. Your car is totaled, and you have a severe neck injury that will require surgery. Then you get the bad news. The driver who hit you has no insurance. They're a ghost. Or maybe they have that state minimum policy we talked about, which pays you $25,000 for your $500,000 medical nightmare. What do? You can sue them, but you can't get blood from a stone. If they don't have assets, you get nothing. This is where uninsured motorist protection would have saved you. It's insurance you buy for yourself, to protect yourself from the irresponsibility of others. Without it, you are on your own. Your medical bills, your lost wages from being unable to work, your pain and suffering. It all falls on your shoulders, all because of a checkbox you unchecked to save maybe $10 a month. And it's not just the big stuff. It's rental reimbursement. You skip it to save $5 a month. Your car gets into an accident and it's in the shop for 3 weeks. Now you're paying $50 a day for a rental car just to get to work and live your life. That's over $1,000 out of your pocket. Your $5 savings just cost you $1,000. Or gap insurance. You buy a brand new car, and a year later it's totaled. The insurance company pays you what the car is worth today, its actual cash value, which is thousands less than what you still owe on your loan. Without gap insurance, you now have no car, and a bill from the bank for $5,000 for a vehicle that is now a cube of scrap metal. A direct website presents these as optional add-ons, like extra toppings on a pizza. An agent presents them as critical parts of a financial safety net, tailored to your specific situation. They know to ask if you have a new car loan, or if you have an emergency fund that could cover a rental car. You are not just a set of data points to them, you are a person with a life to protect. Finally, there's the fourth trap, the one that makes all the others worse. The apples to oranges comparison. This is the core illusion of many online comparison tools. You input your information and get 5 quotes back. Geico is $80. Progressive is $85. Allstate is $90. You immediately think Geico is the best deal. But you haven't looked at the fine print. The Geico quote has liability limits that are half of the others. It has a $2,000 deductible instead of $500. It's missing rental coverage and uninsured motorist protection. You're not comparing the same product. You're comparing a bicycle to a fully loaded SUV, and choosing the bicycle because the price tag is lower. To do a true, fair comparison, you have to manually build each quote on each website with the exact same coverages, the exact same limits, and the exact same deductibles. It is tedious, confusing, and incredibly easy to make a mistake. A single missed detail can mean the difference between a secure future and financial ruin. This is the hidden, unpaid work of the direct model. You become your own underwriter, your own risk analyst, your own compliance officer. An independent agent does this for you. That is their job. They take your needs, find 5 or 10 companies that are a good fit, and then build identical apples-to-apples quotes from each one. They present you with a spreadsheet showing the exact same coverage from 5 different carriers at 5 different prices. Now, and only now, can you make an informed decision based on actual cost, not on a digital illusion designed to lure you in with a low but dangerously misleading price. These traps, the state minimum myth, the deductible deception, the coverage gap catastrophe, and the false comparison, are not just theoretical. They happen every single day to millions of people who thought they were saving money. They are the hidden cost of convenience. The direct model offers you speed and control, but it does so by offloading all the risk, all the knowledge, and all the responsibility directly onto your shoulders. So, if the DIY path is a minefield, and an agent is supposed to be the guide, how do you find a good one? How can you tell a true expert advisor from a slick salesperson just trying to hit a quota? What are the green flags to look for and the bright red flags that tell you to run? That's the critical next step. Finding a great insurance agent is less like shopping and more like hiring for the most important job in your financial life. Your personal risk manager. You wouldn't hire a CFO for your business based on a flashy TV ad, and you shouldn't choose the person protecting your family's future that way either. So, let's treat this like a job interview where you are the CEO, and they are the candidate. First, where do you even find the candidates? The best place to start is almost always with a referral from another professional you already trust. Who's your mortgage broker? Your real estate agent? Your financial advisor or CPA? These people are networkers. Their success depends on recommending other top-tier professionals. Ask them, who do you trust with your own insurance? Who takes care of your clients? A referral from a source like this is worth its weight in gold because their reputation is on the line too. No trusted referrals? Your next step is a targeted local search. Don't just Google insurance agent. Get specific. Search for independent insurance agent specializing in personal auto your city, or top-rated auto insurance agent near me. This is where you start building your shortlist. Now for stage 2, the pre-interview background check. Before you ever pick up the phone, you're going to do some digital reconnaissance. Look at their Google reviews. But don't just look at the star rating. A 5-star rating with 10 reviews is less impressive than a 4.8-star rating with 200 reviews. Read the actual comments. Are people saying, "He saved me $50? Or are they saying, "She took the time to explain everything. She found a huge gap in my old policy," or "She was a lifesaver during my claim"? You're looking for evidence of advice and service, not just a cheap price. Next, visit their website and their LinkedIn profile. Does it look professional? Or does it look like it was built in 1998? A modern, well-maintained online presence shows they invest in their business. Look for a blog, a resources section, or videos. Is this person trying to educate consumers? Or are they just plastering "get a free quote" on every page? An educator is an advisor. A pitchman is a salesperson. You want the educator. See how long they've been in the business. Look for professional designations after their name, like CIC, Certified Insurance Counselor, or CPCU, Chartered Property Casualty Underwriter. These aren't just fancy letters. They represent hundreds of hours of advanced education. It shows a commitment to their craft. Okay, you've got a short list of 2 or 3 promising candidates. Now it's time for the interview. This is where you separate the pros from the pretenders. Whether it's on the phone or in person, you are in control. Your goal is to ask open-ended questions that force them to reveal their process and philosophy. Here are the killer interview questions. Question number 1, and you lead with this. Could you tell me a little bit about your process? How do you work with new clients to figure out what they need? A bad answer, a major red flag, is if they immediately jump to, "Well, what are you paying now? I can probably beat it." Or, "Just send me your current policy, and I'll match the coverages for less." This person is a price shopper, not an advisor. They're assuming your current policy is even correct, which is a huge and dangerous assumption. A great answer, a massive green flag, sounds something like this. "That's a great question. My first step is never to talk about price. It's to understand you. I want to know about your family, your driving habits, what assets you're trying to protect, and what your biggest concerns are. We'll do a full risk assessment together. Only after I understand your unique situation can we start to build a protection plan that actually fits your life." See the difference? One is a transaction. The other is a consultation. Question number 2. How do you get paid? Don't be shy about this. It's a perfectly reasonable question. A red flag is if they get defensive or vague. "Oh, you don't worry about that, the company pays me." That's not good enough. A green flag is total transparency. A good agent will say, "I'm paid a commission by the insurance company we place you with. That commission is already built into the premium, so you're not paying anything extra. And because I'm an independent agent, I get paid a similar commission regardless of which of my dozen companies we choose, so my only incentive is to find the best fit for you, not the one that pays me the most." That's the answer of a confident professional. Question number 3, the big one. Let's say the worst happens. It's 10 p.m. on a Friday, and I've just been in a major accident. Walk me through what I do, and what your role is in that process. A red flag answer. "Oh, you'll just call the 1-800 number on your insurance card. They'll take care of everything." While technically true, this answer shows a complete lack of personal involvement. This agent is a salesperson who disappears after the check clears. A green flag answer is specific and reassuring. First, make sure everyone is safe and call 911. Your safety is the only thing that matters. After that, you can call me anytime. Here's my cell number. Even at 10 p.m. on a Friday, I want to be your first call after the police. I'll help you walk through the immediate steps, make sure you know what information to get, and I will personally get the claim started with the company first thing. I'll be your advocate throughout the entire process, making sure the claims adjuster is treating you fairly and that things are moving along. You call the company, but you work with me. This is an agent who understands their job isn't just to sell a policy. It's to deliver on the promise when it matters most. Question number 4. What are the most common coverage gaps you see people have when they first come to you? This question tests their expertise. A red flag is a generic answer like, oh, people are often underinsured. Okay, but how? A green flag is when they get specific and educational. A lot of people are carrying state minimum liability limits, like 25/50/25, which is terrifyingly low in today's world of six-figure medical bills and expensive cars. Another huge one is not understanding how uninsured and underinsured motorist coverage works, which protects you from other irresponsible drivers. We'd also talk about things like rental reimbursement and whether you have enough to cover a rental for several weeks if your car is in the shop after a major accident. An agent who can immediately pinpoint common, specific risks is an agent who knows their stuff. Finally, question number 5. Assuming we decide to work together, what does our relationship look like going forward? How often will I hear from you? The red flag answer. Well, we'll send you your renewal bill every year. This is the set it and forget it agent. They're a ghost. The green flag answer. I don't believe in set it and forget it insurance. Your life changes. You might buy a house, get a new car, or have a child start driving. I recommend we do a full policy review at least every other year, or anytime you have a major life event. My team or I will reach out proactively to schedule that with you to make sure your coverage is keeping up with your life. This demonstrates a commitment to a long-term relationship, not a one-time sale. So, as you have this conversation, you're listening for these patterns. Green flags are everywhere when an agent has the heart of a teacher. They use analogies. They simplify complex topics. They ask you more questions than you ask them. They talk about value, not just price. They are patient and never make you feel rushed or stupid for asking a question. The red flags are just as obvious. The agent who pressures you to sign today for this special rate. The agent who only wants to talk about how much they can save you. The agent who badmouths every other company. The agent who can't or won't explain what a coverage actually does. And the biggest red flag of all, they don't listen. They just wait for their turn to talk. After you've done your interviews, trust your gut. Who did you feel most comfortable with? Who did you feel actually cared about protecting you? Who did you feel you could trust to have your back in a crisis? Because that's what this is all about. You're not buying a piece of paper. You're hiring a professional partner. But once you've found that perfect agent, or you've decided to go direct and you have those quotes in front of you, the process isn't over. There is one final critical trap. A psychological blind spot that causes millions of people to choose the wrong policy, even when they have all the information. It's a mistake that can silently erase all the hard work you've done, and it happens in the final 5 minutes of the decision. We need to make sure you don't fall for it. This final trap is what I call premium tunnel vision. It's a psychological glitch that happens when our brains get tired. After hours, maybe even days, of comparing liability limits, weighing comprehensive versus collision, and reading customer reviews, our brain is overloaded. It's called decision fatigue. And in that moment of exhaustion, our mind desperately searches for a shortcut, a single simple number to make the final choice easy. That number is almost always the monthly premium. All your careful research, all the nuance about claim satisfaction and roadside assistance options, it all just evaporates. You're left staring at two numbers, $150 a month versus $170, and your tired brain screams, take the cheaper one. Save the $20. You click the button, you sign up, and you feel a sense of relief. The hard part is over. But you didn't just choose a cheaper plan. You likely chose a higher deductible, weaker coverage, or a company with a reputation for fighting you on claims. You fell for the trap. You optimized for the monthly bill instead of the worst-case scenario. It's like spending a year planning the perfect, safest family vacation to a remote national park, and in the final 5 minutes, swapping your reliable 4-wheel drive SUV for a cheap 2-door sports car because it gets slightly better gas mileage. It completely misses the point of the entire journey. The goal of buying insurance isn't to find the lowest possible bill. The goal is to transfer risk. It's to build a financial fortress around your life, so that one bad day on the road doesn't bankrupt you. And premium tunnel vision makes us forget that. So how do we fight it? How do we make sure that our tired, overloaded brain doesn't sabotage our well-researched decision? We need a system, a final filter that we apply before we look at the price. I call it the 3-question gauntlet. When you have your final 2 or 3 quotes in front of you, put the price aside. Cover it with your hand if you have to. And then you ask yourself these 3 questions in order. Question 1 is the catastrophe test. Ask yourself, if I were in a multi-car pileup tomorrow, and my car was totaled, and I was seriously injured, which of these policies would I be praying I had? Be brutally honest. Don't think about the cost. Think about the chaos, the stress, the medical bills, the need for a new car. In that moment of pure crisis, which company, which set of coverages, gives you the deepest sense of security? Which policy feels like a true safety net, and which one feels like it might have holes? Your gut reaction to this question is incredibly telling. It cuts through the noise and reminds you why you're doing this in the first place. Question 2 is the hassle factor test. Ask, if I have a simple claim like a cracked windshield or a fender bender, which company do I believe will make the process the easiest? This is where your research on customer service and claim satisfaction comes into play. Think about it. Are you dealing with an app that gets rave reviews for its simplicity? Or a company known for endless phone trees and paperwork? Are you dealing with a local agent who you can call directly? Or an anonymous call center thousands of miles away? The value of a hassle-free experience is immense. A company that saves you 5 hours of stress and phone calls is worth a lot more than the $20 a month you might save with a competitor known for giving people the runaround. Don't underestimate the cost of your own time and sanity. Only after you have clear answers to those first 2 questions are you allowed to move on to question 3, the value test. Now you can look at the price, and you ask, considering my answers to the first 2 questions, is the price difference justified? Suddenly the decision looks completely different. That policy that's $20 more per month, you now see it's not just $20 more. It's the policy that passed your catastrophe test with flying colors. It's the one with the claim service that people actually praise. That $20 isn't an expense. It's an investment in peace of mind. It's the price of knowing that in your worst moment, you'll be taken care of. Conversely, you might look at the most expensive policy and realize it didn't give you any more confidence in the catastrophe test or the hassle factor test. In that case, it's not providing good value and you can eliminate it. This 3-question gauntlet reframes the entire decision. It forces you to prioritize protection and service first, and use price as the final deciding factor, not the first. And this is where the choice between going direct or using an agent comes full circle. If you're a direct-to-consumer person, you are your own agent. You have to be the one with the discipline to run yourself through this 3-question gauntlet. The websites are designed to push you towards the lowest price. They highlight the savings. They want you to experience premium tunnel vision. Your job is to resist. Your job is to be the adult in the room, to force yourself to evaluate the policy on its real merits before you let the price tag seduce you. If you choose to work with an agent, this gauntlet is their ultimate test. A great agent will walk you through this exact thought process, maybe using different words but the same logic. They will say things like, I know this option is a few $100s more for the year, but let me show you what that gets you. It means your deductible is $500 lower, so if you have a claim, you're actually ahead. It also includes rental car reimbursement, so you won't be stranded. They frame the conversation around value and protection. They are your defense against your own worst instincts. A bad agent, or really just a salesperson, will do the opposite. They will lead with price. They'll sense your premium tunnel vision and use it against you, pushing the cheapest possible plan to make a quick sale, knowing full well it might not be the right protection for you. If an agent isn't having a conversation with you about worst-case scenarios and value, they are not serving you. They are just selling to you. So, which is right for you? Going direct is for the disciplined. It's for the person who enjoys the research, who trusts their own ability to compare complex products, and who has the willpower to run themselves through that final gauntlet to avoid the price trap. The potential reward is finding a great deal, but the risk is making a costly mistake if you rush the final step. Using an agent is for the person who wants a guide. It's for someone who values expert advice and wants a partner to help them navigate the complexities and avoid the psychological traps. The potential reward is a perfectly tailored policy and a long-term relationship with a trusted advisor. The risk is ending up with a bad agent who prioritizes their commission over your protection. The truth is, neither path is inherently better. The best path is the one you can commit to fully. A half-researched direct policy is dangerous. A blindly trusted, unvetted agent is just as bad. The ultimate decision isn't about a website versus a person. It's about being an engaged, informed consumer. It's about understanding that what you're buying isn't just a piece of paper or a monthly bill. You're buying a promise that if everything goes wrong, if you find yourself on the side of the road watching smoke pour from your engine, that someone somewhere has your back. Your final decision, whether you make it by clicking a mouse or shaking a hand, should be about one thing: choosing the promise you trust the most.